Hi, everyone. Peter Lemieux from the Insurance Exam Queen, Melissa Dillon. Happy to share a concept for those people taking life insurance. One of the ones that people get hung up on are these things called non-forfeiture options. So if that's an issue for you, see if this helps. Everybody knows what it means to forfeit. To forfeit means you give up. But this benefit says non-forfeiture. You can't give up. You can't give up something in your policy because it's legally yours, not the insurance company. And that which you can't give up is the cash value of your whole life policy. Legally belongs to the policyholder, so you can't give it up. So the question is, I don't want the policy anymore. What happens to my cash value? The one I don't need to explain is you just cancel the policy and say, give me my money. It's a cash surrender. You get the check. Bingo. That's easy to understand. But there's two others that really get people kind of buckled. I'll try to talk about. One's called extended term. I wrote it down even though people can't always read my writing. Extended term and something called reduced paid up. How do I keep those straight? So to help you out, I brought a prop. This little device is a treasure. I got this as a Christmas present. If you drink red wine, it's really cool to aerate the wine, runs through some air. It takes the bitterness and the snap out of the wine. And my daughter gave me this for Christmas. What we do is we just put this down on the bottle, press a button. This tube sucks the wine up, aerates it, and brings it into your glass. Wonderful. I'm drinking the wine with my daughter who gave me the gift, and the well runs dry. No wine coming up. This is not as long as the bottle. I got a half a bottle of wine, and I can't get at it. So we look at this thing, and oh my goodness, it extends. Look at that. It goes right to the bottom of the wine. This is extending. So when we talk about your cash value, and I tell you we're going to give you extended term, we're going to make it last longer, okay? The death benefit you've got will make up 100,000, and you don't want to pay for it anymore. With extended term, we'll keep you covered for 100,000 for a period of time. But eventually, even the extension has an end. If I have like a magnum of alcohol, this isn't going to get to the bottom, okay? It extends for only a period of time. It'll keep you fully covered, but it'll run out, which is why we call it extended term. Because term, if we all remember, is temporary. Okay, I got that. I'm going to keep my same insurance death benefit. I don't pay anything, but it's going to run out. So I better die fast, right? The other option is say, I don't like that extended term because I don't like the fact that this has got an end to it. What if I die in 20 years and this is only good for 11? No insurance, no cash. I'm a loser. You can take reduced paid up and just think of the words reduced. I don't have 100,000 anymore. We're going to reduce it to a paid up policy. What's a paid up policy? You don't owe any money. It's paid up forever. It's a paid up whole life. So whether I die next month or when I'm 99, it's going to pay out. There is no end on reduced paid up. The trade-off is you're not going to be covered for 100,000. We're going to lower it, right? So you have a choice. Do I want to extend the coverage I have and it will run out? Or do I want to reduce the coverage? So if I die, I won't get as much, my family won't get as much money, but it'll pay no matter when I die. Those are two options. You take one or the other. But having said all that, please, let's keep this in perspective. 99% of the people, if they don't want their insurance anymore, take option one. They just cash it out. So these two aren't used very often, but they're on the test. So don't mix them up, okay? The last thing I want to tell you is if you don't tell the insurance company anything, you just don't pay your policy, the default option is extended term. So I'll close with a quick story really happened. We had a client who lost his job, didn't pay his insurance, didn't tell his wife. He was just breaking his neck looking for other jobs. 6 months go by, he gets killed in a car accident. The family's going through the policies, and they got a letter from the insurance company that says, your policy is lapsed because you didn't pay your premium. And they say, oh, gosh, not only is this a tragedy that the guy is dead, but he doesn't even have insurance. Fortunately, they had a good insurance agent who said, not so fast, amigo. I think that policy's got extended term. Of course, they didn't know what that meant. We opened it up, and sure, he was covered for like 14 years. They said, you know, this $50,000 life insurance that lapsed, I'm going to get you $50,000 because you died during the extended term. Extended term, reduced paid up, or cash. That's the three non-forfeiture options. Hopefully this helps. You can get a lot more help if you go on Insurance Exam Queen with Melissa Dillon. She's got options for different courses and different price categories. She'll get you through the test. This was just a little tip if that's an area that's confusing you. Thanks a lot, people. Have a great day, and we'll see you around.